I made $6,900 using this one simple trading strategy that I'm going to show you guys in this video. This strategy has allowed me to make anywhere from $50,000 to $100,000 trading every single month. And if you guys apply it, I'm sure that in the next 3 to 6 months, you guys will be at $10,000 trading every single month. If you guys are new to my channel, my name is Colt Mosdef. Make sure you hit that subscribe button below. I have a ton of other videos based around trading and my strategy. And if you guys are looking for one-on-one mentorship, there is a link in the description where you can book a phone call with me to get to know each other and to see if we would be a good fit to work with each other. Now, without further ado, let's get into my computer and let's go over this strategy. So here is my TradeZella for September 30th. My net profit was $6,952. I did take 2 trades, one on YM and the other on ES. And for this example, we actually are going to go over ES. The trade that I took was right here. Here are my executions. And I ended up taking the same trade on YM as well. Here also are my executions. And one thing that you guys need to understand is when we are trading indexes like the Dow Jones, the S&P 500, NASDAQ, most of the time, their movement is going to be correlated in the same direction. So if YM is going up, ES and NQ are most likely going up. If YM is going down, ES and NQ are most likely going down. The main index that I like to focus on is the NQ, the NASDAQ, but I ended up taking a trade off of ES. One thing too that's super important, if you guys don't know, is ES and YM, they do correlate mainly in the same direction, but there may be a setup that's more clear on YM versus ES. And that's exactly what happened today. When I took this trade, I saw a setup that was way clear on ES versus YM. So let's go over the setup and exactly why I took this trade. So first things first, I want you guys to notice the market structure was very clear. We were in a very clear downtrend. Price was just pushing up, and immediately my bias was to go long. There was no thought that came across my mind to go and take a short position. The trend is your friend. So if the market's going in an uptrend, we're most likely going to be taking buys or longs. So as I saw the market creating this clear uptrend, I wanted to look for higher highs and higher lows. Now, when I'm looking for market structure to make these higher highs and higher lows, as price is making these higher highs, I want to see a fair value gap be formed within those higher highs. So when I was looking at the market right here, I saw that we made this new higher high and we had a fair value gap that was formed within this higher high. If you guys go to indicators right here and you type in FEG, you can get this indicator by Nephew Sam that will automatically print these fair value gaps on the chart. That is my entry model, using a fair value gap. And a fair value gap simply is a 3 candlestick pattern. We have the first candle, the second candle that overall creates a gap, and the third candle that closes the gap. So all that's being printed when we're looking at this indicator is it's printing a rectangle from the first candle's high to the third candle's low and extending it into the future. Ideally, what we want to see happen is after the third candle closes, we want to see the fourth, fifth, or sixth candle retrade into this rectangle, our fair value gap, and that's where we would get an entry. Now, when I had came to the markets, this fair value gap had formed, price was retrading into it multiple times, and it was failing to push away. Now, I saw when I came to the markets that I had a perfect entry. This candle had hit the fair value gap, and that's when I decided to take a buy position. Now guys, you're not always going to get a perfect entry. My entry was at 6,721. So it was a little above the fair value gap, but most of the time when price is retrading into the fair value gap, that's when you want to be taking a long position. I just saw this trade. I was like, dude, this is my perfect setup. I know for a fact it is going to push up and eventually it's going to hit my take profit. So when I went into this trade, I had entered right here at 67.21. My stop loss was right below the first candle that created the fair value gap right here on this candle. And then for my take profit, all I did is I got the fibs from this previous higher low to the current higher high, and my negative 100% level was where my take profit was, right here. So you guys can see that price had closed my trade right here on this candle at 67.26. What's my negative 100% level right here? What's the price of it? 67.26. Price retraded to it perfectly, closed me out on this candle right here. So the strategy is not complicated whatsoever. And I like to think of this strategy as the KISS strategy. KISS, the acronym for it, is keep it stupid simple. I know a lot of you traders out here, you're overcomplicating the process. You're thinking about this indicator and what somebody else said on YouTube. Guys, you do not need to overcomplicate this strategy whatsoever. Trading should be simple. If your setup's there, you take a trade. If the setup is not there, you're not taking a trade. And if you're only trading when the setup's there, you're using proper risk management, you're going to be killing the freaking game. Like my win ratio right now, I think is at like 75 to 80%. So I don't have the craziest risk reward ratios. If you guys look, where I took my long, what was it? 67.21.50. Stop loss is right below here. Take profit if we bring up the fibs again. You guys can see it wasn't even a one-to-one risk to reward. Oh, what am I doing, guys? I put a short position instead of a long. Okay, what was it? 67.21.50 right here. Stops were right below here. Take profit was up here. I had a 1.5 risk to reward ratio, not even a 2-to-1. But that's because I did get a late entry. If I would have had my entry a little bit lower, if I would have had it at the fair value gap, it would have given me a 2.75 risk to reward ratio. So that was overall kind of my fault that I entered a little bit late, and it did take the risk to reward ratio down. But most of the time when you guys are using a strategy, you're going to be getting at least a 2-to-1 risk to reward ratio. And that is absolutely phenomenal when you guys are looking at this strategy. So that's exactly why I took this trade, how I made $6,700. The same thing was applicable on YM. I saw that we had this fair value gap right in here. I took a long position right here off this candle. Price ended up closing right around here. So guys, keeping it stupid simple. That is the name of the game. You don't need to overcomplicate it. Like I said, if you guys want one-on-one mentorship, click the link in the description. Book a call with me. It's 100% free. Let's get to know each other, your situation and your goals with trading. And let's just see if I can help you guys out. Thanks for coming on this video and watching it till the end, guys. I'll see you on the next one. Peace out. Not a lot of people made it to the end of the video, but you did. Make sure you share this video with a friend. Also, comment below. I want to know who you guys are and how I can help you guys out with your trading. And if you're not subscribed to my channel, hit that subscribe button. I'm dropping weekly videos every single week on trading to help you guys out. Look forward to seeing you guys soon.